It is the last day of March, Monday, March 31st, big show. It's going to carry on a theme. It's going to be tariffs. It's going to be rebalancing. I've got one question that you want to ask yourself for every stock that you see in your portfolio right now. And that question is going to be the first topic. We're going to go into a couple of podcasts that I listened to this weekend. One that made me super bullish on NVIDIA, and it's like 10 minutes, the first 10 minutes of the podcast. So you should absolutely go listen to it if you have NVIDIA in your portfolio. We've got key levels for the S&P. We've got a Stanley Druckenmiller quote just to keep you based on this one. I've got theories on stuff. Catalyst Watch, what's going on this week. International has outperformed. Is Google just undervalued? The one tech stock in Berkshire that's actually 21% up year to date. And we'll go over Chinese stocks and then finally gold. But I want to go over the cues. It got you out on Friday. Friday afternoon, the candle, it got you out with a 2% loss. We are looking at another 1% down. This week is all about tariffs. Okay? And today in particular, the VIX is spiking. It's up 10% this morning. 10%. Okay? 5 days while this tariff shit is going on. If you had invested in the VIX, you're up 39%. And there are plenty of ETFs. Go and Google ETFs for the VIX that follow the VIX. Go and Google it. Your 52-week range, though, the 52-week high was August 5th during that Japan unwind trade where it spiked up to 65. So don't think that we can't go. You know, the VIX wants to stay at 20. It wants to live at 20. But with volatility and things in the market, and basically, hey, here's where we're going to, you know, we're going to do tariffs. We're going to do it on everybody, blah, blah, blah. The VIX is going to spike. And the VIX, I've told you before, the VIX and the 10-year bond are the two things that you want to look at to determine the direction of the market. And they've been playing together. And we broke down below this green line. And what's that green line? It's a weekly trend that has held up. Now, we've gone below it before. Are we heading into this 2022 kind of thing? I don't think so. You can see here in June, we start trending up. I think you see something similar to this, but we've got to make it through this week. Okay, this week is a big, big week. So what do you want to do this week? Well, maybe you're thinking, God, I want to get out of this market. I want to get my stocks out. I would advise against that for every stock, but there's one question you want to ask yourself with any stock in your portfolio, and that is this going to make me more money than putting the money somewhere else? And that money somewhere else could be cash. So if you think we're going down further and you have a stock where you're down, you know, say 15, 20, 30% on it, maybe if it's in a brokerage account, maybe you want to sell that one. Okay. Say you're in something like, you know, Amazon. Even though I think Amazon is great value at this price, you can see right there that the algorithm got you out. Maybe you want to get out of that one. Maybe. Just understand, you can take that watershed, the moment, the write-off, but you can't buy back in for 30 days. So if you think we're set up for 30 days of bad stuff, you know, you could have gotten out of here February 5th. And then you buy back in. You could have sold out at 237, 240, and then buy back in at 200. If you think that's the case, and 30 days from now, you know, it's going to be May 1st. May 1st, I'll be on vacation. We know what happens on vacations. When I go on vacation, market goes down. So May 1st, I'm going out there. But this particular 4-hour algorithm on Amazon is 50-50. You win 50% of the time. So maybe that's one that you want to get out of. Apple, we're at 217. 217. Okay, maybe we're going down to that 200. Maybe you want to sell out of it. Here in December, I was saying at 260, I'm taking a huge sale. I think I wound up selling at 257. Didn't time it perfectly. Got out a bunch. Here at 240 in February, I got out of a bunch again. Am I going to buy back in? Not right now. Algorithm has me in at 213. I don't trust this little downturn. So the one thing you have to ask yourself is, with stocks like this, if you're going to rebalance, and say you're in Bank of America, okay? I've said it before. Bank of America under $40 is an absolute screaming buy. Now, it's in the core portfolio. Is it the best of the financials? I don't think so. I think Citigroup, I think Wells Fargo actually is one of the best ones. So if this is making you crazy and losing money like this, understand, if you go to the Qs, okay, we're going to go to the Qs, and when in doubt, zoom out. Zoom out and look at a weekly chart of this, okay? If you knew that we were going down in 2020 and you could have timed it, absolutely great, you saved 30%. If you knew we were going down in 2022, you could have saved yourself 30%. But when do you get back in? That's the real question. When do you get back in? Because right now, this little downturn right here doesn't look like panic. Okay? The highs on the Qs, 540. Right there. We're going to go 540. This is 12% down. You're not at 30%. And could you save money? Absolutely. Could this snap back with some type of, Liberation Day? We're using it as a negotiation tactic. We got what we wanted. We're talking winners, and now we're not going to do reciprocal tariffs. I don't think so. I don't think that's the case, because Trump's tariff plans, just so you know, I listened to this podcast, the All In podcast, the AI Cold War. Go in Signalgate, CoreWeave IPO, tariff endgames, El Salvador deportations. Go and listen to this. If you own NVIDIA, go and listen to the first 10 minutes of this podcast. It will make you more bullish than you've ever been. But then as you get into this, okay, at about 20 minutes or so, you hear a quote. It's Donald Trump going on Larry King in 1987, almost 40 years ago. He ranted about how the world is taking advantage of the U.S. and we need reciprocal tariffs. Okay, so I got more bullish on NVIDIA and the AI trade. I think he brought up Vertiv as well on this one, and is one of the insiders who has direct knowledge of the books at NVIDIA. And so it was a great podcast. But if you are worried about this market, make a plan. And the plan should be, okay, if I do get out, where am I putting that money? Is it going to sit in cash? Is it going to go into gold? Is it going to go into copper? Is it going to go into some other stock or ETF? And the other question you want to ask yourself, when am I going to get back in? Because when you are going to get back in is going to be the key point. And you have to put, okay, down at the bottom, this is where I'm going to get back in. Put actual numbers. Okay, I'm sitting on my hands. I'm not doing a damn thing. I'm going to start adding to my positions this week because I've got a lot of cash on the sidelines. But it doesn't mean I wound up doing this perfectly. I am down over 10%. I believe it's like almost 11, 12% year to date. Doesn't make me feel good. But I know every time I have been down 10 to 15% and I have reevaluated and rebalanced my portfolio and gotten rid of my losers and written them off, and maybe I rebuy them in 30 days. But every time I've done that, I've been able to make sure that I'm good. I don't get completely out. Now, that's just me. I slept perfectly fine last night. But you have to understand, if you're just getting out and getting out, I've seen this. My parents did this. Other friends have done this. They've gotten out. And they just didn't identify before they got out when they'd get back in. So indecision crept in. And you have to stick to a plan. That's the biggest thing that you can do, is create a plan. I'm not turned off by this 12% down. Because here's the thing. I may have been added to a Signal chat with Scott Besson. You know, this administration is famous for just adding people on Signal chats. And they told me that while the first half of this year is about tariffs and it's about trade, and it's about taking the market down so that they can get the interest rates down to where they want them. The second half of this year is going to focus on tax reform, meaning less taxes, and deregulation. So we brought up Bank of America before. Maybe if you think he's going to deregulate the banks, maybe that's a great play. Here, the 4-hour algorithm got you out with a nice little 1% gain. You could have gotten out before it lost confirmation, okay, with a little bit nicer gain. Over 24 months, this makes you in 23 positions. This makes you 45% versus 42% buy and hold. It's virtually the same thing. You win 52% of the time. So you win 12 times and you lose 11 times. Average win 5%. It's not a bad position to take. And if you want Trendspider, I worked with them this weekend. Okay? If you click on view pricing options, and this is what I want to show you, there is now a quarterly pricing option where you save up to 40%. Okay? It's huge. There is a quarterly price option there. Skip the trial and save even more. Okay, you can get the 2-week trial for $29, and then you can put the quarterly in, or you can sign up for the yearly, either one. But understand, okay, there are different levels here, and the enhanced, I urge you, this one is the most impressive, but premium is the most popular. Okay, standard is one that you can get and make it buy. Perfectly fine. But if you want the 4-hour algorithm, which back tests really, really well. And again, when I tell you back testing, one of the things of back testing is when you go in here, you can do a date range, and you see that right down there. So go and back test some of these strategies against 2022. Because if we are going back to 2022, and you see that, okay? When you see that we're going back to 2022 was a bear market. If you think that's where we're going, go and backtest some of the strategies. It might save you money. It very well might. But again, quarterly pricing is a great thing because I don't believe 2 weeks is enough to get you into Trendspider. I don't think it teaches you enough about the power of this software. But a quarter, maybe. If you already know technicals, a quarter might be enough for you to get in. But the reality, I think you need a year. For me, it took me at least 8 months to understand Trendspider. It's the work that you put in. So, again, rebalancing, if you're going to take money out, first you have to ask yourself, is my money better staying in this stock or is my money getting out of this stock? Because you make your own decisions. And if you get out of that stock, then you have to identify where the money's going. Is it going to cash? Is it going somewhere else? And then see if you want to get back into that stock, meaning like VOO or QQQ. What's the price I'm going to get in? Lower and higher, because it may not hit your lower price. It may immediately bounce up to a higher price, and you may have just sold it, and you may need to buy back in at a higher price. Doesn't mean you can't. Just means you want to do that. So, if you don't understand tariffs, this is the article for you. Liberation Day, why Trump is using tariffs for trade policy. I'm not going to go into it. I don't agree with this route. I think it's wrong. I think the way that he's doing it is wrong. But, hey, that's what was voted in. He's not doing anything that he didn't promise to do. And the American people voted him in. That's what America is about. I don't agree with it, but that he's got the power to do it. Okay? Trump says reciprocal tariffs to target all countries. He went on a rant last night on Air Force One. Okay? He may go bigger than expected. And again, you might see the VIX spike even more. So get ready. Get ready. Because when I listened to the All In podcast, I was a little scared. And then I listened to the Compound. And I've still got 17 minutes left. But this one scared the shit out of me. They talked about how the administration is most likely going to focus on taxes. Greed is good. And this was a great, great episode because they talked about how Wall Street, I was younger when the original movie Wall Street, where Michael Douglas says greed is good. This was a great episode. It incorporated movie quotes all over the place. But that greed is good movie called Wall Street. And if you haven't seen it, go and watch it. It still holds up to this day. But when he says greed is good, understand Oliver Stone was a communist. And Oliver Stone did not believe in greed is good. But that particular movie launched a bunch of tech bros. It launched a bunch of people that got into Wall Street for the reason that Oliver Stone didn't want you to get into Wall Street. And it launched this entire generation of kids like the Wolf of Wall Street. And that's it. I mean, this was just such a great, great episode. And they go over, don't get out. You know, you want to be careful about your money. You want to have a 60-40 portfolio if that suits your risk tolerance. But again, you want to make sure you have a plan. Okay? 5,700 was a key level on the S&P. Let's go and look at SPY because that's going to do it. 5,700 was a key level. We broke right through it. We couldn't hold it. So where are we going? Again, the algorithm has you out. 549 is a key point. Where are you in pre-market? You are at 550. That's a key point. So if we don't hold this, I think you may get down to this 500 level. Okay, between 500 and 520. I think you might. Weekly, you can see the indicator, the MACD is down here. The last time the MACD was down this low, guess when? October 23rd, 2023. That's the last time the MACD, it doesn't mean that the stock market, the price can't go up or down. And it doesn't indicate where the price level is going to happen because we've got different news than in October 2023. In October 2023, the Fed was like, you know what? Maybe we're going to stop hiking rates and we're going to start cutting rates. And that took the market off. Right now, you don't have any news like that other than maybe Trump goes a little bit lighter. But if you want to trade SPY, the 4-hour algorithm makes you 35%. Okay, over the last 24 months. Buying and holding makes you 39%. You win 56% of the time on 18 positions. So the 4-hour algorithm works. And why did we lose 5,700? Because there's no buyers. Who's buying on a Friday? Everybody was panic selling on a Friday based on Liberation Day. Who's buying? Who's the crazy person that's buying? It's the people with 1 to 5 year time frames. It's not the people with 1 month time frames. It's the people with longer term time frames. And that's it. And Goldman Sachs has raised its probability that a recession occurs in 12 months from 20% to 35%. Understand, we may be in a recession right now. It's a backward looking indicator. Okay, so there's no way to tell when you're in a recession. Only afterwards can you tell that you were in a recession. But Goldman Sachs just raised the probability. Again, if you're trusting a 35% strategy, then you're getting out. Because look at it the other way. It's a 65% chance that we're not going to get a recession. They just raised the probability. They didn't say it's for sure, because if I got 35% odds, I'm not putting my money on 35%. I'm putting my money on the 65%. Okay, so let the headline play out. Now, go and listen. I'm going to put this link in the newsletter. And the newsletter, it's 100% free during the week. I play it for you. This is the risk of emotional driven trading. So I want you to listen to this before you go and rebalance and sell some stocks. Because again, the question that you're going to ask yourself is, am I better off in the stock, in cash, in copper, in gold, somewhere else? But emotionally trading doesn't benefit you. Okay, and I'm not the only one that says make sure you have a plan and make sure you stick to it. And understanding a plan, it takes time. And creating a plan, it takes time. But you better do it. Before you spend, you go out there and you'll spend, 6 months researching a car that you have to buy. You won't make a house decision in 2 weeks, but you hear somebody say, oh my God, this one's a great buy on the internet. And then you go and research it for 20 minutes and you say, okay, I'm going to put my money into this stock. Treat it like a house. Treat it like a car. Okay? Stanley Druckenmiller, we talk about this one all the time. And he's a great, great investor. He ran Dukinese, I don't even know how to say it, Capital for 30 years, averaging 30% annual returns with 0 down years. Long-term, 30% CAGR. Okay? Short positions, 0%. His quote, I'm not even sure I've ever made money shorting. It's one of the greatest investors of all time. So don't think that you can go out there and buy an inverse ETF. You can hedge a little bit. If you're scared by SQQQ, by some of those triple leveraged ETFs on the downside, you can do that. But don't throw your major portion of your portfolio into a short position. Shorts just lose. Now, bearish weekly, 821. There's in technical trading, the 8-day and the 21-day are key because 8 days, it usually covers short term. And then 21-day, because it's just under a month, that usually covers medium term. Okay. Bearish weekly 821 EMA crosses are showing up everywhere, even in the market. That's a bearish move. So what you're going to do is you're going to go over here and you're going to say log in and import. And then it's going to import it into your setup. Okay. And when you go over here, click to open it. And this is the 821 scanner. So if we just go over to Market Scanner and we say 821 and you put this in here, and this is by subscription by Trendspider right here, and we scan this and we look down, you can see right here. Well, I think is it this one? Scan. No. Where is it? Recent 821. Let's rerun this one because I want to show you in the strategy tester. We're going to go over here. Oh, recent 821. There we go. Login and import. You're already subscribed to this one. It is called, bear with me. Bear with me one moment because 821 EMA bear cross. I think I already had imported 821. We're going to say bear to cross. EMA, there we go. This scanner doesn't belong to you. We're going to say bear cross 821. There we go. And we're going to pull that. And then we're going to go over to the strategy tester and go to the 4 hour. And we're going to look at these because APD, which is Air Products Chemical, that one, bear cross. Apple, bear cross. AMP, which is Ameriprise, bear cross. HBAN, Huntington Basics, bear cross. Are these opportunities? Airbnb, bear cross. It has you out in the algorithm. But you want to look at these and say, okay, is this an opportunity to get back in? Delta Airlines at 42. This was a $67 stock like a couple months ago, back in February. AXP, American Express. FTV, which is Fortive. You can GE Healthcare, which I thought was a great stock at 70. It's trading back down there. Is it time to get back in? BlackRock, which is a great one. These guys own all the real estate. Disney, 97. It's a $120 stock in a long-term position. Okay, these aren't stocks that you get into when it does an 821 for a short-term trade. You want long-term, but find Royal Caribbean, which is a great opportunity to get in. This one on a weekly, if we go and look at a weekly, it's just pulling back to its 50-day. And if that gets down there to 195, it's a great long-term position. AVGO, which is Broadcom, 165. It broke down off of that 185 level, and we are free falling. Is it time to get back in? Maybe look at the RSI. So there is a long list. Google, 154. Algorithm got you out. Make sure you have a plan. So when you import that one, make sure you have a plan. Now, you can import it by just doing what I just did. Just click on the link that I'm going to put in the newsletter. Now, the Dow's decline, biggest losers, winners as blue chips face index. Here's the thing. Remember, the Dow's only 30 stocks. So what's the biggest year, the year's biggest decliners? Salesforce, Nvidia, Nike, Apple, Amazon. Mag 7, Amazon, Apple, Nvidia. Okay, Salesforce might be included there. The advancers, biotech, Amgen, that's pharmaceutical. Chevron, oil, up 14%. Johnson & Johnson, pharmaceutical. Coke, up 13%, even though RFK is saying, hey, we're not going to allow food stamps to buy sugary drinks, which I agree with. Verizon Communications, up 12% year to date. So, again, the list will tell you a lot. Tech is not working. And when that happens, you have to understand it's resetting valuations. That's all it's doing. These are opportunities to get in, rebalance your portfolio. Some things that are happening. Tesla deliveries. We're going to get Tesla deliveries. I guarantee you, they're going to disappoint. There's no way he's beating last year. And last year was a disappointment. You didn't have Project Juniper, which is the new Model Y. You had it for the entire quarter. You had it under wraps. So I don't think that you, produced a ton of Model Ys, which is the number one selling car in the world. And B, because they didn't want to produce that car in the old version. They were waiting to do the new one. They were retooling the factory. So expect it to disappoint. Okay. So Monday, volatility watch. You got Quantum, Sunova. Go and read this. It goes day by day. All day key data report on Tuesday. You've got all the deliveries. Tesla, NIO, XPeng, Rivian, Li Auto. You've got all that. And then on Wednesday is tariff day. Okay, details of the U.S. reciprocal tariffs will be announced on Wednesday. I don't care what else is going on Wednesday. It's tariff day. That's it. And Thursday, the U.S. will start collecting duties on imported vehicles and auto parts. The tariff applies to all imported cars and light trucks. Again, tariffs. And then Friday, Microsoft will hold a special event at its headquarters in Redmond to celebrate its 50th anniversary. Don't expect any news from that one. But again, it's all about tariffs. It's all about tariffs. This entire week is about tariffs. So if you don't want to invest in the U.S., here's 10 global stocks to buy now. Guess what's one of them? CLS, Celestica. It's a Canadian company. Okay. Algorithm got you out. Algorithm makes you 391%. Buying and holding makes you 567%. It's about a coin flip. It's 17 positions, but it got you out with a loss this time. Okay. Have we started going down? Take a look at a weekly. It's just slightly resetting. You're not even down at your 50-day yet. So understand what you're looking at when you go to these. But again, if you want 10 stocks, there's one. Okay? While AI has not been working, you've got a lot of catalysts coming up. You've got Meta with LlamaCon scheduled for April 9th through 11th and April 29th. That's all about the open source stuff. If you don't think there's going to be some wars here around the AI stuff, it's going to be crazy with Metacon. Then, the Google Cloud next is April 9th through 12th. Metacon is April 29th. So you can read all about these events. Google released its Gemini 2.5 market upcoming. The 2.5 Gemini is amazing. And I will tell you, I think Google is undervalued. That's my personal opinion. Am I adding more? No, because every AI is coming in and I've got a big position in Google. It's significantly lower than the price where it's trading now. But do I think there are other stocks that will outperform Google at this point? Google is now trading at 2021 prices. Cloud revenue went from 17 billion to 27. Cloud revenue went from 17 billion to 43 billion in that time period, 2021. Google subscriptions revenue went from 27 billion to 40 billion. YouTube revenue went from 27 billion to 36 billion. Okay? That's what you're paying for Google. It's crazy when you look at a weekly. And you go back, again, you go back to 2021 right here, and we should be using this as support. It's an opportunity to get into that one. I like this look at Google because, again, I believe Google's a great buy. Am I buying it right now? No, I am waiting for the trend to get up. And right now on a weekly, the trend is down. You don't have confirmation. Am I going to time this one? No. But I'm going to start adding to it when we get a different trend. So make your list. You know, last week we talked about watch lists. And Google is a great opportunity. Now, hedge funds are dumping global tech. The reason is hedge funds bought Google at about 40 or 50. And so they're dumping their big gains. And you could do that. And then you could buy back in because that just raises your price, your average purchase price. Don't worry about buying it back in. It's trading at 155. Don't worry about buying back in at 160. But wait for the trend. You can get rid of it. You know, again, is the money going to do better in cash over the next week or two or 30 days even? And this hedge funds, when big money starts dumping their stock, that's something you want to take notice of. Now, tech just triggered its first death cross since March 2022, XLK. So if we go over here and we look at XLK, this looks horrible. Algorithm got you out with a 3% loss. Okay, 21 positions over the last 24 months. Am I getting out of this one? No. I'm not panicking. I do have a big position in this. I could take a lot of money off the table on this. The RSI is at 35. Do I think it's coming down to 181? It could. And at 206, it's going to look like a great buy. If we pull this back, I'm going to pull this volume because remember, volume drives price. And where's the volume at? It's right here. If you pass 201, okay, in pre-market, you're 203. If you pass 201, get ready. You're coming down to 181 or even 174. This market still has more downside to go if we continue the tariff war. Because when I listened to the compound, they said it perfectly. What a tariff war is, hey, we're going to put tariffs on you. And then the other country that just got tariffs put on you, they come back and put more tariffs on you. So it's just a continuing cycle. And that's what we're seeing happen. And what happens to that? Then Trump is going to start bailing out farmers like he did with China when we had the first war. So expect tech to get hit. Absolutely, tech will get hit. Now, Shai Bulor gives you the levels, the Fibonacci levels to watch for popular growth tech stocks. You can start buying at these levels. Now, don't just do it. Understand why you're buying the stocks, what the price to earnings is, and what the growth could be. Because the last thing you want to do is buy something like ASTS at $16, and then AT&T says, you know what, that satellite service, we're just going to go with Starlink, and then ASTS is done. The last thing you want to do is to put Rocket Labs at $15 and then have a rocket explode, and all of a sudden it's trading at $7, and you just, balls deep into that one. The last thing you want to do is have CrowdStrike at $298 and then have another kernel into their thing and have the world shut down because of CrowdStrike, and all of a sudden it's trading at $200. Understand the risks, understand the opportunities. Now, one thing, and I don't have the picture to show, but one thing, I saw a headline of I think it was CNBC Pro, and it said this one tech stock is Berkshire's biggest gain. It's up 21% in 2025. I will include the picture in the newsletter. And by the way, if you're not subscribed to the newsletter, I have no idea why. It is completely free. It's right down here on Linktree. You can go and see it. It is like the 7th one down, 5th one down, somewhere around there. Just go and click on it. It's free and you can get it for free, but I will include it in the newsletter, the picture. So I saw this headline and I went to Perplexity And I said, what's the best performing tech stock in the Berkshire portfolio this year? And it told me it's VeriSign. VRSN, I think it. Yeah, VRSN. VRSN. Now, look at that. You want to talk about correction deniers? Look at this one. I mean, if you bought this, say you bought this when the market started going down in February at 235, you're at 250 right now. 250. So say you want to look at some of this, we'll go over here to Trendspider and put in correction deniers by Trendspider and scan for those. And it's going to pull up a bunch of stocks. And this is just a stock. This looks at the things like this, VeriSign. And it's a huge, huge list. Do I see any that I actually, Bro? Which is, no, that's Brown and Brown. But look at that. Look at that. AGI. Look at that. WRB, which is WR Berkeley. MGY. CTRE. Again, correction deniers. These are stocks that are going up. And you can buy stocks in a trend that are going up. They're reversing. Okay, maybe they have longer term. You look at Southwest Airlines. All the airlines are going down. These guys just announced baggage fees. And all of a sudden, you're up at your 200-day. Now, it's moved sideways. The weekly doesn't look good as the short term. But again, it's looking at short-term reversals. And this one, you could have bought right here. This is Universal Insurance Holdings, UVE, March 17th, right here. The algorithm outperforms over the last 2 years. So would you trust buying this one at 21 and all of a sudden you're at 23 like 2 weeks later? Again, correction deniers. It's a good one. And so when I looked at VeriSign, VRSN, because that's the biggest Berkeley one, Berkshire Hathaway, again, year to date up 21%. It's down 0.39%. The valuation is high. Does it make sense to buy? Well, let's see. In the quant, was it ever a strong buy? It wasn't. And the reason is because the valuation and the growth have all been lagging. And it's been that way for a very long time. But the stock price has gone up. And part of the reason is because of the momentum. Momentum is one of the strongest things in the market. So if you can find one of these stocks that has momentum, that actually has a valuation and growth as an A, and you use Seeking Alpha like that, it's absolutely a winner. So what I did was I said, you know what? I want to look for some of these stocks. And so I did a screener. And I've got screeners. I will publish an article for all the newsletter subscribers. I will publish for Seeking Alpha subscribers. I will put in, I think there's 5 or 6 different scans that I have built. I will put in a summary of them. I am also putting in a summary of all of the algorithms, the watch lists, and the scanners that I have built in Trendspider, and I will put them out for a summary for any of the subscribers there as well. You won't get the 4-hour algorithm. You won't get all the watch lists and thing. But if I publish them as a public publish, like the 1-hour algorithm that I put out, I will put that one out for you too. But here are 4 stocks with a very low PEG ratio. And you may say, well, I don't know what a PEG ratio is. Go and Google it. Okay, it's price to earnings and growth put in. And you've got 4 of them that have very strong quant ratings. Okay, Gilead, which is pharmaceutical. You've got Wells Fargo. You've got Uber, and you've got Morgan Stanley. Okay, Wells Fargo, opportune. We talked about what I think that the second half of this year is going to be deregulation and taxes. Wells Fargo, banking. Okay, the only thing wrong with this is the valuation. What does Wall Street think that it's worth? They think it's worth $83. That's a 17% upside. Have they chased it down? Looks like it's coming down a little bit, but not as low as where you are right now. And everything on this looks good. Okay, I like this one. If you don't like that one, go and look at the other banks. Look at MFG. Okay, this is Mizuho Financial. This one's got a strong buy. And you look at that one, it's an A as far as valuation. So go and find the ones that you like. But if you look at the PEG ratio, you know, maybe you like Uber. I love Uber to be $100 stock when this market starts to turn around. It's got a C valuation. It's ranked number 1 in passenger, ground, and transport. So go and understand it. You could even trade it on the 4-hour algorithm. Uber on the 4-hour algorithm makes you 76%. Just got you out with a 1% loss. It wins 33% of the time. I like this one to find entries. And I like this one to trade between $70 and $82. So as it comes down to 70, it's at $71.30. Okay, say you're going to buy $500 worth of this. Don't wait for a freaking dollar in the stock price. Just get into it. Buy and hold, and I think it's a $100 stock. That's personally. Again, don't take the word of a douche on the internet, but go and look at these 4 stocks. Okay, find one. Gilead, Wells Fargo, Uber, or Morgan Stanley. And I'll include that scan in today's newsletter. Now, maybe you wanted to, we talked about how international is good. Chinese stocks just went into correction territory. Okay, let's go look at the one that I like, which is BABA. This one trades cheap compared to its American counterparts. And look, algorithm just got you out with a 65% gain. 65% gain. You bought this one at 82 here on January 17th. Talk about correction deniers. This one just continued up through this. Now it's settling down. If we look at the weekly's still a little stretched. I would say your support is around 120. We talked about how 120 was a resistance. If you can hold 120, this is a good stock to continue up because the 50-day is going to cross the 200-day. What's that called? That's a golden cross. And that's a very good technical term. So if you want to buy China and you think that the world is going to turn around, maybe China's one to do, because once you get into a correction, there's a possibility that stimulus can get you out, and China is stimulating their economy. The U.S. so far, not stimulating the economy. What's happening with the, well, Trump says TikTok deal is close before April 5th. Expect Oracle and Microsoft. Blackstone is reportedly considered acquiring a small minor stake. TikTok is a huge thing. Now, if the TikTok ban goes into play, expect Meta to get a bump, or Pinterest. But Meta just got you out on the algorithm. I think Meta under $600 is a great buy, but your time frame needs to be long, because right now there is no good news. If the LlamaCon thing later in April is a great push, this is fantastic, because over the last 24 months, you've had 24 positions, one a month. And look at the performance chart on the 4-hour algorithm. It makes you 106%. Okay, 189% is what you've made if you just bought and held. Your average win, 9.92. So you can trade this on the 4-hour all you want. But again, if we get a bounce here because a deal is done and it comes back to the U.S., that's a good thing. Now, these are 5 inflection points to support bonds, international stocks, or gold. Okay, because there are other things other than stocks. And bonds, I have not gone into bonds. I don't understand bonds. I don't want to own bonds. But, over time, bonds have done fairly well, and they're safe. They protect your capital. Okay, the era of U.S. fiscal excess is over, with federal spending plus 12% in the past 12 months, but mandated to fall minus 0.1% over the next 6, and Trump Doge to enact bigger budget cuts in the next 4 quarters. A contraction of $7 trillion in government means lower income growth, lower payrolls, higher household savings, and lower inflation into 2026. Small government is bullish for U.S. treasuries. True. Magnificent 7 have gone to magnificent. They have. They are down this year. That's not good. No, inflection point number 2. Inflection point number 3. Europe is stimulating their damn economy. We're not. Okay. Germany is throwing $1 trillion into their economy. That's huge. And the end of Japanese deflation. Japanese land prices, CPI, and wages growing at fastest pace in decades. Japanese deflation has anchored global bond yields over the past 30 years. I don't understand what that means. Go and ask Perplexity. Chinese exports to consumption. Chinese economic reorientation to consumption from exports is set to accelerate this year. They are consuming more than they are exporting. China is working on driving up consumer spending via capital markets, again, pushing their own economy. With a trade war already discounted, Bank of America sees. So again, here are Magnificent 7 focused ETFs. Here are ETFs focused on the S&P 500. They give you ETFs to go into these things. But again, there are 5 things in the market that support bonds, international stocks, and gold. Now, if you're interested in gold, gold is at its all-time high. GLD, you can invest in GLD. It is up today in pre-market 1.42%. Because gold is a flight to safety. We're seeing Bitcoin is down. That's not a flight to safety. Gold is. And Michael Saylor would tell you, you're crazy buying gold. But gold has been the trade. If you look at GLD, let's just go and trade the GLD, the Spider Gold Trust. You talk about a correction denier. Look at that one. Made you 8% during the time when the market was going down. Got you out here with a 0.21 at 269, but you're trading at 287. Okay? So understand what you're investing in, what you want for the future, and then go and make some plans, because that's what this market is all about. I have always said when I rebalanced my portfolio, I've done really, really well. And these are the times when you want to rebalance. If you have a stock that isn't working, remember, a 50% loss takes a 100% gain to just recover and get back to even. That's why you don't want to hold on to losers. But if that stock, like Nvidia, say you bought Nvidia up here at 140, okay, it's not that expensive in my mind. So am I throwing out Nvidia at 104? No, but it's down 5%. At under $100, this is a crazy cheap stock if they continue to spend. And that's the biggest issue. If they continue to spend. If the hyperscalers stop spending, expect Nvidia to be a $50 stock. Now, Jensen will say, all I need is one. Because if one is spending, then the others are afraid that they're underspending. But are they going to Nvidia or are they going to Broadcom or Credo, another place? Again, if you don't want that, just buy SMH. You know, that has all the chips. We need chips. You know, we could have a glut of chips so far. But again, that I'm not meaning to scare you. I'm meaning to say, make your decisions, have a plan. And if you're not sleeping at night because of this downturn, then your portfolio is not allocated correctly. Because I do think there is a lot more downside than there is upside. For some reason, I just don't find the upside with a catalyst. But those are typically times when long-term investors start buying. So if Nvidia gets under $100, start buying. Meta is down at $550. You've got Apple at $217. It's holding up for some reason. You've got Amazon breaking down below that 188, which was resistance. If you look at that one, that was clear resistance here in June 2021, in December 2021. It is making more money today than it was in 2021. It's got more growth on the horizon than in 2021. It's got an ad business that wasn't around in 2021. Again, that's a great buy. And you look at Google, we talk about this one back in 2021. It's trading at about the same price. Those are the 2021 highs. We've just round tripped to 2021. Now, Meta isn't even close to where it was in 2021. That is $380. You know, Microsoft at the top of 2021 was at $351. So it's around there. Netflix back in 2021. This one has grown tremendously. That's at 696. Are you heading back down there? Nvidia in 2021. I mean, this one in 2021, it topped out at $33, just to give you an idea. You know, Tesla 2021, we can go back to 2021 here. Tesla 2021, that $400. You're at 246. So understand what you're buying, understand what you're looking at, understand that, in my opinion, you're getting a great discount at many stocks, but it won't feel comfortable buying. And it doesn't feel comfortable buying. It never does. It absolutely never does. And if you're tracking the 4-hour algorithm on Trendspider for Tesla, it doesn't have you out yet. It absolutely does not have you out. You could have gotten out at 280 when you were at 248, but the algorithm kept you in for some reason. It's not perfect. It wins 43% of the time. So far, this one, again, 23 positions. So it loses what? 13 and it wins 10. So again, you want to make sure what you're buying and where you're at and where your comfort level is. That's the show. I will talk to you tomorrow. Let's hope we don't have another tariff thing, because the Qs are down, let's see, 2% again. I mean, it's a bloody day, but it's time to start pouring some money back in. And don't go balls deep. Just, you know, if you got $1,000 to spend, okay, put $50 in today, because I don't think we're done with the downside. But again, a year from now, you can take that $50 out and it might be $55 or $60. And that's the game that you want to play. You want to play for long term. Okay, I'll talk to you Monday.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.